Good morning, friends. Today we're going to discuss the movements on the Bitcoin market. Not going to be such a long update. Tomorrow we're going to discuss some altcoins again. But I wanted to share some thoughts about Bitcoin, gold, silver and euro dollar. And some Bitcoin smaller time frame movements. Overall, if you like my content, please subscribe to the channel or like beneath. Also, I'm starting to use Instagram more, where I'm going to share tips and tricks in trading and stuff that I do in my life. If you want to follow me there, the link is beneath. Would be great. Regarding Bitcoin, what you see on the screen is essentially my main scenario for the coming period. I thought we would have a more corrective move around 10.5k, but we broke through it and now we are facing the final hurdle, which is the 11.5 resistance zone, which does mean that we could be hopping around, consolidating, moving sideways for another 3 to 4 months. And what does that suit? Well, altcoins. So for now, I'm suspecting that we've hit resistance and that we're going to calm down. And this is one of the scenarios that I do have. But why is it important that we are facing a resistance and potential downwards movement? It's because the euro dollar is about to reverse as well. If you see this chart, you can actually copy paste it on the previous movements of the euro dollar. What we see on the euro dollar is that we broke through the heavy resistance of 130.5 to 137, and then around the 20th of July we started to accelerate towards 118, which means that the euro gets stronger against the USD, or the USD gets weaker, and the USD in general gets weaker as the DXY, the US dollar currency index, it fell down a lot as well and is ready for a slight bounce. Is this good for the world economy? Well, it's what I've been saying is that the essential epicenter of our problems is the dollar. So I do not want to be in the dollar. I rather be in the euro in the coming years, or in gold, silver and Bitcoin. So what we see is that the dollar is weakening, and because of the weakening, we see that other currencies or asset classes have been doing really well. As we see here, gold has been in a massive uptrend already, but it broke further up from the 20th of July from 1800 to a peak of 1980. A rally of 10% for gold is a lot. And this happened the moment that the euro dollar started to rally further, which means that dollar started to weaken. Then second one is our dearest friend silver, which, as you can see, on the exact same moment broke out heavily, and it rallied even more from 19 bucks to 26. I also believe that silver is inside the bull market, has to correct a little, test previous levels, and then it's ready to continue rallying towards the probably 35 level, 40 level. I'm still heavily in gold and silver, and I'm also heavily in crypto, and I'll stay in that until I see a shift. So what we can get from this is that Bitcoin, gold and silver act similarly. That means that once the dollar starts to weaken and starts to show weakness in general, these are the assets you want to have, as people are flying from the dollar towards the safe haven. Which means that if the US stock exchange is going to drop, it could be possible that the dollar is dropping, that the yield is going up on the government bonds on the US, and that the money is actually flowing out of the dollar towards crypto, commodities and stuff. Which means that what we've seen in March can be a liquidity crash and won't happen again if the stock market starts to turn around. I do believe that there is shit on the way for the equity markets and the legacy markets and anything related to debt. So it seems very likely that we're going into a period of deflation. However, does that mean that we should not be seeing any surges on the gold, silver and other markets? It seems very likely that once once this yield starts to turn around, and when this one starts to crawl up, the money goes out of the US dollar, US government bonds. People start to feel unsafe about it, and then they start to fly towards the dollar, the gold and silver. As when you go back in history, you can see that during the dot-com bubble and the crash there, the yield actually came down. In 2008, the yield came down. So while the whole problem was in the US, people were still flying towards the dollar for safety. And when that starts to shift, so when this one starts to crawl up, people want a higher yield or interest on their government bond, which means that they don't trust the government anymore. So they are flying out of the US dollar and demand a higher interest on it. And when the interest starts to crawl up, the government of the US has to pay more interest payments, or just interest payments on their government bonds, which with that high debt level is impossible to pay. So then you want to be, as an investor and safe asset manager for yourself, you want to be in assets that are not related to that. So then you're going towards gold, silver and Bitcoin. And it doesn't mean that these are going up because of the value themselves, but it can also go up because the dollar is losing value. So you remain, you keep your value as long as you can. And that's the ultimate goal as you want as a trader and investor. As when you keep your money, you will always lose money every year. So that's probably the heavy reason why Bitcoin broke up, or one of the underlying reasons why Bitcoin broke up, and that's a good thing. However, we are in a resistance zone. We do have that 11.5 CME gap, and I think we are close to hitting it. We might be seeing one more tap towards the high, but overall I'm suspecting that we're going to see a further corrective move, in which the scenario I painted here, actually it's following the scenario quite well, regardless of the fact that, I'll just keep going back to this one, and I'll get a new one here. So what we see is we broke above the high. Generally I wanted to see more strength, but this is a really odd upwards grind. We broke back into the range, and now we can see that we are on a support level. So for instance, this previous high, which is also claimed for support in this area, can be sustaining as support for a little bit. And so we can mark this as support, which means we tapped it. And then the crucial part comes, can we break or hold against 11.2? If we reject the previous high for resistance, it seems very likely we're going to test the low of this range, which is 10.7, and then slowly the volatility starts to drain away. If we lose 10.7, you know the drill. I'm going to look for levels around 10.2 to 9.8, might be a deep wick, and then we just continue the consolidation. If we break 11.2, we might get that final uptick towards 11.5, and then the same scenario should be applied. So I don't believe we're going to go through 11.5 in one go, given that euro dollar is about to reverse for a little bit. But I see some very interesting signs on the markets, and I'm more than bullish on Bitcoin and commodities for the coming years than I have ever been, and I'm more than safe having these. If you like this small video, please subscribe to the channel or like beneath, and don't forget to check out my Instagram. See you tomorrow.